I'm Charlotte McLeod with the Investing News Network, and here today with me is Ross Beaty, Chairman of Pan American Silver and Equinox Gold. Thank you so much for being here today.
My pleasure.
All right, let's hop right into our questions. We've just come off a historic week for gold. We saw it go past 2,000 per ounce for the first time ever. I want to ask you to begin with, how much do you think gold's rise can be attributed to COVID-19, and how much of it is related to other factors that were in play before the virus began to spread?
Right. So, like in January this year, gold was probably in the third or even fourth year. Yeah, it was about the fourth year of a bull market. So gold's doing well. Gold was on an uptrend, and it was likely to continue. And it was there for all manner of fundamental reasons. COVID came along, and COVID just added gasoline to the fire. It's all about, to me, the bottom line is the debasement of paper currencies and the outlook for inflation. That's really what drives gold. COVID globally has just ignited the debt fire. Every country in the world doesn't even know what to borrow means anymore. They're just printing money and borrowing money like crazy. And it's devaluing paper currency. And everybody who knows anything about gold knows that it's a store of value and has been for 5,000 years. And that role is today as relevant as it's ever been in 5,000 years. So, couple that with negative interest debt that everybody in the world seems to be issuing these days, not least of which is the U.S., various geopolitical trauma, and the outlook for COVID to continue with us for some time, adding uncertainty and a certain amount of chaos to the world. And you've got an absolute perfect storm for gold. So it's no surprise to me at all that it's shot through $2,000. It's something I was expecting, quite frankly, 3 or 4 years ago. But it hasn't created the setting. It has simply added fire to the what was already a well-burning fire.
Okay. Now, in a couple of recent said that gold is in the 5th inning of a bull market.
Yeah.
And I wondered if you could put that into a little bit more context. Where did it begin? And what do the next innings look like?
Yeah, sure. I mean, I basically just finished saying that gold has been running since it broke out of a bear market in pretty much January 2016. It went up quite smartly in 2016. It had a lull, a pause for a year or so. Then it ran again in 2018, again in 2019, and it's gone crazy this year. So for sure, we're not in inning 1, and we're not in inning 9. We're in the 4th or 5th inning, probably today around the 5th inning. But that was before COVID came along, and now it's anybody's guess, really, Charlotte. It could be the game will go into extra innings for sure. How many innings, I don't know. When it's going to stop, I don't know. It will end someday. It will end. The gold is a cyclical commodity, just like every commodity and every market for that matter. And the bull market will turn into a bear at some point, but it's not going to be for some time. So I'm bullish for the foreseeable future.
Right. And maybe this is a silly question, but is there anything right now that could throw gold off of the path that it's on?
I don't see anything personally. I just don't, never say never. The most dangerous words are this time it's different, No, things will end at some point, but it's not going to be for a while. And the reason I say that is I just don't see governments changing their modus operandi right now of just putting as much juice into the economy as possible, printing as much money as they can, trying to get things going again. I don't think it's going to work very well, and it's going to end in more debt and more debasement and more money printing. So I think it's going to keep going for quite a while. We could get into a kind of a depression kind of a situation, which would be negative for gold. It would be negative for everything, less negative for gold than most things, but it would be ugly for everybody and everyone and every company and every market. So that could be a very horrible outcome. But that won't come for a while. But, to be honest, Charlotte, I'm not sure how this is all going to end. The only real way traditionally governments have improved their debt to GDP ratio is either growth going crazy, and I just don't see that happening, or inflation devaluing everything. And that's more likely the situation, but even then, I don't see it coming for a little while. So I don't think this is going to end anytime soon, but it for sure will end someday. And I don't know what the factors causing it to end will be particularly.
Okay, and you mentioned a depression, and I've heard comparisons. People are comparing our current situation to what happened in 2008. Some people are comparing it back even further to the Great Depression. Do you have any comparisons there that you would make?
Well, you know, each cycle bust is or each cycle crisis has somewhat different fundamentals, different reasons. So it's very dangerous to be too clever in trying to equate one with another. What caused the Great Depression is something that is unlikely to happen today. We're having a totally different set of factors. Nobody's ever experienced a pandemic in their lifetime like this. This is a global trauma, even worse than the Great Depression in terms of its global impact. By the same token, the financial crisis was due to very sloppy financial management by central banks, quite frankly, treasuries, and a drunken orgy of crazy securities that were being printed that caused financial crisis that rocked the banks. That was quickly dealt with by the government printing money. That caused gold to go up. A lot of other currencies, a lot of other commodities to go up as well from 2009 to 2011 or 2012. And so there are some similarities to that, but not that many, I would say.
Mhm. Okay, now I definitely want to get your thoughts on silver as well. The silver price has been on the rise, although unlike gold, it's not at the point where it's pushing through its old high. What's your sense of where silver's at right now? And would you say, some people are saying it's industrial side, maybe holding it back. What are your thoughts?
Well, you know, silver is a schizophrenic metal in the sense it doesn't really know what it is. One day it's precious, one day it's industrial. Silver's the most useful metal of all metals. It is more widely used than any other metal in both industrial applications, plus it's money, like gold. So because it's got elements in both camps, to understand its price trends and its history, you have to look at what's going on with both gold, therefore silver as money, and say copper, therefore silver as an industrial metal. And in the last couple of years, before COVID came along, silver was being negatively impacted by a shift in Chinese demand moving from really infrastructure demand to consumer demand and services economy. And that hurt the outlook, industrial outlook for silver to some degree, along with a lot of other metals like zinc and copper and so on. And that's why in those years when the fundamentals for gold were pretty good, that was helping silver, but the fundamentals for the industrial metals weren't so good, and that was hurting the industrial metals. Well, silver didn't do as well as gold in that context, and that's why the gold-silver ratio went up and up and up and up until sort of earlier this spring, or mid-spring, I guess, say May, June this year, when finally, with all the stimulus that was happening all over the world, industrial demand started to go up for silver, led by clean energy industry, photovoltaic cells, and a myriad of other things which use silver in industrial applications. And a lot of speculators as well piled into silver as a proxy for gold. So it was moving with gold and with the movement, the uptrend in other industrial metals like zinc and like copper. So silver in the last couple of months has been the best of both worlds, and that's why it's outperformed gold, and therefore the gold-silver ratio has gone down from 105 down to say maybe 80 or 75 to 1, much closer to its more normal pattern of about 55 to 1. So that's today. You know, tomorrow is a different question. So silver's had, you know, the other thing about silver is it's a much smaller market than gold. So a little bit of money into silver makes a lot more impact. It has a lot more volatility or beta than gold. And there's been a lot of money piling into silver for those reasons I mentioned. Therefore, it's done better than gold in the last little while. Though that may continue, if industrial demand for silver remains strong this fall, you're going to see silver outperform gold again. But they're both going to outperform, say, copper and other metals, I think, because the fundamentals for both industrial production growth and the use of and the purchase of silver as money, as a precious metal, they're both on bullish trends. So I think it'll do pretty well. It'll probably do better than gold and better than industrial metals. If, on the other hand, the industrial production goes down or demand goes down, you're going to see silver underperform gold, but still probably outperform the base metals.
Okay, so you seem pretty comfortable with definitely where gold is right now and probably silver. And, you know, a lot of people who are in the market don't seem to feel that way. I have the sense that some people are feeling really uneasy about the current price level, even if they've been in this market for a long time and they've been waiting for this to happen. So I wondered, what would your advice be to people who are feeling apprehensive about these levels?
Yeah, so this is a bull market. It's a secular bull market. It's a big shift. My big advice would be don't sell too soon. I mean, if you're really nervous, take some money off the table, but don't take it all. I don't think the fundamental reasons for gold and silver doing well are going to be at an end anytime soon. I really do think we're going to have these continuing strong markets for some foreseeable period in the future. Whether it's a year or 3 or 5 years, I don't know, but it's going to be with us for some time. And so in that environment, there's nothing magical about a $2,000 gold price. It's just a number. Yes, it's a record high in kind of dollars of the day, you could say, but there's nothing magical about it. Gold could be $3,000 or it could be $1,000. It's all sentiment. And so, you know, I look back to, say, palladium, which was trading for $150, $170 back in the 1980s, and it's over $2,000 today, and yet the demand is up. So some metals have reverse leverage almost. If the demand goes up, very often the price goes up, or if the price goes up, the demand goes up. So it's kind of opposite to traditional economics, which are you know, and if the price goes up, there's less demand. In fact, in gold and silver, the reverse may be true. So I don't really see a huge decreased demand today as a monetary metal or as money for silver or for gold, even though the prices today are at record highs. There's nothing magic about the number. And there's lots of other metals where you can, you know, when copper went from 70 cents to $4 an ounce, $4 a pound over, say, a 10 or 12 year period there in the 2000s, it's still trading for 280, 290. I mean, it hasn't gone back to 70 cents. So there's a lot of people who say, well, gold's going to revert to the mean, you know, revert to back, say, to where it might have been average for the last 20 years. I don't see that happening. I mean, gold is a bit of a wild animal. It kind of finds its own price, and conventional economics don't really apply to gold very much. It's got this odd wild animal nature to it.
Okay, thanks.
That was a bit of a long answer.
No, that's great.
In other words, I have no idea.
Yeah. Okay, so I want to ask you a question that our audience has been asking quite a bit in the last little while, which is, gold and silver prices are up and people seem to not be seeing the stocks follow, at least to the same degree. So I want to ask if that's something you've been noticing, and if it is, then why might that be the case?
Yeah, I mean, they're different investors, right? People who invest in physical metal are generally not the same kind of people who invest in the equities, and vice versa. So they don't necessarily have direct correlation. But the nice thing is people who invest in equities, in gold equities or silver equities, they have to be bullish on the metal, or they wouldn't be buying these companies. They'd buy a Microsoft or something else. So they tend to trade these companies up in really optimistic times. And the smaller, the riskier the company, the more kind of crazy valuations they have. A company that has only exploration assets and no fundamental value might have 100 or 200 or 300% price rise without any real fundamentals backing it. Just a sentiment change that brings a lot of money into the sector. Typically, though, when you have a metal price move like we've seen in gold, where, you know, gold's up, what, 33% in the last, you know, say this year, 1,500 to 2,000. Typically what will happen in the earlier stages of these bull markets is the major companies move first, followed by the intermediates, and lastly the juniors. And when the market is really on a blowout stage, which will happen in a few years, or maybe even sooner than that, the juniors will have this crazy kind of blowout phase where the valuations become completely insane. but early on, and kind of, we're still in the early-ish stages, I think, of this. The majors have done the first quite good sized move. The Barrick's trading at an all-time high. Newmont's done well. Agnico Eagle, all those major companies. Money has moved down into the intermediate space as well. They're doing okay, but they're lagging the gold price. They're lagging the majors, but they'll catch up. And then ultimately, at the end of this, as the cycle gathers energy, you're going to have a move into the juniors. It always seems to happen that way. And if I was an investor, I'd put some money in all three of those categories. I'd buy your Newmonts, I'd buy your, companies like Equinox Gold or Pan American Silver in the sort of middle or more middle tier area, and then a small handful of juniors, just to get exposure to all of those things.
Okay, and actually that's a perfect lead into my next question. So on the note of stocks, I know you're involved in a number of companies at different stages, production, development, exploration. When investors are evaluating companies in a high price environment that we're in right now, what should they be looking for? What would you want to be seeing companies doing at a time like this?
Well, again, each of those categories, you look for different things. The smaller the company, the more you want to look for management and make sure people have exposure to their own company stories. They have a track record. The company is well enough financed. And the project is good. At the end of the day, it's all about the project, but you can have good management teams that can mess up a good project. You can have bad management teams that can mess up a good project, and you can have good management teams who can make a lousy project. So management is really, really important. And you just have to look who's behind the company, who are the shareholders, who are the CEO and the operating people. That's for the smaller companies. The big companies, what I look for is I look for a company with exposure to a rise in the metal price. And so for example, what I'm always trying to build when I'm building these companies, like in Equinox, for example, it's my youngest company. It's 2.5 years old now. We went big. We went for scale and as fast as we could to build a company that had big production. So we'll be producing 500,000 or so ounces this year, going up to almost 1 million ounces at the end of next year per year, and then huge reserves and resources, because you need leverage both on the income statement that's current production, and you need leverage on the balance sheet, which I take in the case of a mining company is the fundamental assets of the company, and that is their gold reserves and resources. So the bigger reserve and resource, the more value they're going to have as the gold price or silver price rises. So I look for that. I look for leverage. I look for management, track record. But at the end of the day, mining is an extremely risky business. And if I was the average investor, I would also adopt a diversified approach and buy a few companies in each, 2 or 3 companies in each one of those categories, build a diversified portfolio. You're going to have some winners, some losers, and hopefully, if you're right about gold and silver going up, you're going to have a good sized average win across the board.
Okay, well, that's great. Is there any final words you want to leave us with? Maybe what you're working on right now, or any other thoughts that you might have?
I'm doing my best to put my money where my mouth is, Charlotte. I'm heavily invested in the gold and silver space. It's been a giant win this year, and it was a pretty good win, really from 2016 on. A lot of your subscribers might actually properly say, is it too late to get in? And for sure, the easy money has been made. Gold's gone up 30. Oh, it's more than that. Gold's gone up from the bottom of $1,000, $1,050 at the beginning of 2016 to $2,000. So that's 100% price rise. Most of the companies that have evolved have gone up 200% or 150 to 200% in the same period. They've outperformed the gold price, which is normal in a bull market. But it's not over yet. And so I would say if you're already invested, if you're worried, take a little bit of money off the table, but certainly keep most of it still there. I think we still have a lot of happy times yet to come. And I think also with what you said is true also, the equities have not really reflected today's gold price of $2,000. They're reflecting more $1,600 or $1,700 an ounce, or even $1,500 an ounce. So there's plenty of room there as long as the gold price stays at $2,000. And if you're invested, if you're looking to get in, do that diversified approach, and I think you're still going to be fine, albeit the big easy money's behind us.
Okay, well, I think that's a great note to end on. Thanks so much for sharing your thoughts. Pleasure to speak with you.
My pleasure. Thank you.
Thank you. Once again, I'm Charlotte McLeod with the Investing News Network, and this is Ross Beaty with Pan American Silver and Equinox Gold.